Great.
Okay.
Great.
All right. A feel-good story. Shares of Cisco are rallying after an AI-fueled beat and raise in another quarter of double-digit order growth. This was a super quarter, and it made me feel like don't give up the ship. And joining us now, first on CNBC, Cisco Chair and CEO Chuck Robbins. Chuck, I'm going to go right into it. Congratulations. This was a monster quarter. How did it come together?
Thank you, Jim. It's good to be here with you all. Wish I was there in person, but we'll do that sometime in the future. Look, the team's executed really well. We had a record quarter. We had $1.3 billion in AI orders, AI infrastructure orders from the hyperscalers, where last fiscal year we did just over $2 billion total. We're going to do probably double what we did last year with the hyperscalers and AI. We saw our pipeline extend in the neo cloud, the sovereign cloud, the enterprise space around AI. And then we saw this big uptake begin on this campus refresh with the new portfolio that we put out there. So we had strong performance across geos, across technology areas, and across customer segments. So it was just a good quarter.
Now, I do think that you were critical of yourself, and I want to get there because you bought Splunk. You have a very good security division. I did a show where I talked about your security division, but you weren't happy with that, and that seemed to be the one business that you think you should improve on.
Well, what I said was we're clearly not happy with where we are in security, but we've made a ton of progress. And if you just look at the revenue in the quarter, you can misinterpret the progress we've made in security because what really happened is there's an accounting treatment to cloud-based Splunk versus on-prem Splunk. And the on-prem stuff, you recognize revenue immediately. The cloud stuff, you recognize it over the life of the contract. And the percentage of cloud deals, which is great for us long-term, was much higher than we anticipated in the quarter. But the demand side, we saw strong demand on our new firewalls, which has been a challenging area for us for years. We saw strong demand in our new and refreshed products. And so overall, we're still pleased with where their business is going, but we got to get there faster.
Now, one of the things that you and I talked about when we were at GTC for NVIDIA was a partnership. And I know someone said to me after, Jim, that's not a serious partnership. Cisco's going to take forever, whatever. There was a remarkable amount of business that you did with NVIDIA this quarter.
Well, if you're providing infrastructure under AI, odds are you're working with NVIDIA right now. So we obviously have a great partnership with them. We actually agreed to build an Ethernet switch with their silicon, their Spectrum X silicon, that'll be coming out in the second half of our fiscal year. We believe that this ecosystem is going to continue to expand, and our job is to actually be neutral party in the midst of this ecosystem. But obviously, the partnership we have with NVIDIA has been fantastic for us. We also announced big partnerships with Middle East sovereign clouds like G42 and Humane. And so we just continue to try to extend our presence and be an ecosystem partner to anyone who's relevant in this space.
Chuck, there was a wistful moment on the call where someone asked you that you were there in 1999, 2000, and could it be the same thing? And I want you to share with our audience your answer because it's very pertinent to the people who are very bearish right now and think that we're on some sort of precipice.
Well, I remember that time way too well, Jim, unfortunately. And there were customers that had no money. There were customers that were building business models that really were full of hope. And in this case, the predominant spenders in this era that we have now are companies that have incredible balance sheets, incredible cash flow, incredible profitability. They're the biggest tech companies in the world, and they fundamentally view this transition as existential to their future. And so the belief that they're going to stop spending anytime soon, I think, is flawed. We haven't even gotten into physical AI. We haven't really begun to get into robotics. We haven't begun to get into agentic. This thing hasn't even really moved through into the enterprise in the way that it's going to. So I still believe it's early, and I think that this technology is going to be revolutionary, and it's going to affect everything, and we're just scratching the surface of what's going to happen in this space.
But I do want to quote you as saying, I think the companies that are investing in this are massive, strong balance sheets, strong cash flow, profitable companies. Isn't that probably the exact opposite of what OpenAI and Sam Altman are?
Well, I think they're early. They're a key provider of the technology that is going to make this all happen. So I think the question relative to OpenAI is how rapidly can they get to profitability? how do they scale their revenue. But we have a great partnership with them. We're using their technology internally, and we're working with them on many of these neo clouds, and many of the sovereign clouds are using their technology as well. So I think that they're a big part of this ecosystem, and I think they're going to be very successful over time.
Okay. Hey, Chuck, I'm glad you mentioned accounting, because there is this ongoing debate about the lifespan accounting of some of these tools. There's a great quote the other day in a story on the tape. You won't always need a Porsche 911 engine to run these workloads. Eventually, a VW engine will do fine. Is that a fair way to look at it?
Well, I don't know if you saw Lisa Sue's interview yesterday that she did, but I thought she did an amazing job of explaining this issue. And she said the workloads are just going to continue to expand. Every workload is not going to need the latest and greatest GPU. And so I think you're going to continue. It's no different than what we see today. We build networking products that span from low-end applications all the way to the highest end, these AI training models, and our technology spans the use cases, and I don't think it's going to be any different in this case. So I just thought she did a brilliant job explaining that yesterday.
Well, I want to thank you, Chuck, for coming on. I think it was very interesting for you to raise this early in your year and said to me that you've got tremendous confidence about what's to come, and it's not a one-quarter phenomenon.
It's really incredible to see the acceleration of what our teams have built. We didn't even talk about our silicon strategy and the uptake we have. That's at the core of what's happening in this AI infrastructure space and with the hyperscalers. And we just see them continuing to accelerate their spend. Our teams have done a great job and are building technology that these customers want, and we have a lot of confidence in the balance of the year.
Well played, Chuck Robbins, Chairman CEO of Cisco. I love it when you come on both in good and bad times, and boy, is this a great one. Thank you.
Thank you.